Sounds good.
Does that work? Yeah. Okay.
Sounds great.
I'm Lauren.
Wally, nice to meet you.
you.
We're going to be neighbors.
Yeah. Hell yeah.
We met,
Yeah, we already met.
and I know Wally well.
I was trying to sell Adam on putting more assets on the platform. That's why I was.
Yeah, Wally's
Well, I
wanting
wasn't
to
being
dine me.
It's all for business.
All right, cool. So we'll kick it off. Can everyone hear me all right in the back? All right, cool. I am Liz Nell. I'm the West Coast Sales Director at Chainalysis, and we feel very honored to be co-hosting, co-sponsoring the event tonight. Thank you so much to George and the House of Web3. I absolutely love this space. I actually learned about it because of Adam over here, and I've just been so blown away every time I'm here. So just a quick background on me. I spent about 10 years working in traditional finance, left to start my own company, not in crypto, in ed tech, which was just such a bad decision. But did that for about 5 years through the pandemic. Learned a lot, sold the company last year and joined Chainalysis and jumped into Web3 about 6 months ago. So I was feeling a little bit nervous about hosting tonight because I'm still new to the space, but I have some great panelists and excited to dive in. And I just feel like being here, especially being building in the US in Web3 right now, there's a lot of questions, confusions, uncertainty. So thinking about building safely, building smartly is just more important than ever. So excited to talk about that. So I will just start by letting my lovely panelists introduce themselves and talk a little bit about who they are and what they are building.
Awesome. I don't have much mic experience, so this feels very unusual. But hi, everyone. It's great to see so many familiar faces. I'm Adam. I'm a longtime community member at Edge and Node and House of Web3. I love it here. And I'm also, I guess I should have led with this, one of the founders of Plural Energy. And what we do at Plural is essentially we bring DeFi to renewable energy projects. The renewable energy space is very illiquid. Deals take forever, and it's also very inaccessible. Like most people in this room probably wouldn't have access to good renewable energy investments. And so those are just traits that obviously seem to make sense for a blockchain-based project. So what we do is we work directly with renewable energy companies to create security tokens that we file with the SEC, which, as I said during the happy hour, is easier than it sounds. And then we allow these companies to do a public token offering and allow you or anyone to invest with some of the most, prestigious institutional investors in the world in these assets that you usually wouldn't have access to. So that's what we do. Excited to talk about this. This is a huge topic for us. Obviously, we're building like highly regulated, compliant tech, and we've learned a lot about how to do it and how to do it well. Hopefully.
Awesome. Hi, everyone. My name is Lauren. I'm a compliance specialist at Ava Labs currently. I have a background in compliance and risk management in crypto, though. I've worked at 2 other US-based crypto exchanges. And most recently, I came from TRM Labs, which is another blockchain analytics company, very similar to Chainalysis. So I'm coming really with the perspective of the legal regulatory background. And I feel like this topic is very timely right now with all of the court decisions coming out, the bills being put before Congress. So excited to talk about what Ava Labs is doing specifically. I was brought on to help with Enclave Markets specifically, which is a fully encrypted exchange that they launched last year. And I'll get more into it in a bit, but I think it will hopefully address some of the issues we've seen in crypto in the last couple of years.
Awesome. It's great to see everybody here. So my name is Wally. I head up relationships for Dinara. We are a crypto native banking services provider for crypto startups and VCs. So for those of you building in crypto, you've probably felt some of the pain in getting a banking kind of services relationship, but then also managing your assets across both whatever kind of blockchains and kind of crypto assets that you need to manage and the fiat side. And so what we're really doing is trying to abstract away the kind of multi-vendor relationships that folks have with fiat banks, custodians, exchanges, self-custody, tracking transactions on spreadsheets, and make the lives of founders and particularly CFOs, FinOps leads a whole lot easier and much more like what they get on the traditional business banking side, but hopefully in a much better kind of UI, UX, and it's with crypto, so it's much more fun. And so that's what we've been building, and it's I think a pretty topical conversation to have today.
Yeah, awesome. So we will kick it off. Just as a starting point, when I was organizing this, we had the title "Building Safely in Web3" a lot earlier than we had the content. And I was trying to think, like, what does that really mean? What does it mean to build safely? And one of the first questions that comes to mind, and just putting it really broadly, is like, what do we need to do? Like, what's your perspective as a group? And would love to hear from everyone to really get a big group of people into Web3 and to see that more mass adoption and scale that we all really want to see.
Are we all gonna like
Well,
wrestle for it? Or?
Whoever, it's just,
Go in
whoever
order.
wants to jump in.
You can go first, and then I'll just say,
All right.
that was a great answer, and
Okay.
step off.
Okay, perfect. That's how it'll go. Well, yeah, I think that I'm gonna try to do my best to not do like the traditional like. I've been in the audience of these panels a lot, not to do like the same like, oh, we need better UX, et cetera, answers.
Thank you.
Yeah, you're welcome. So I think that there's like some irony embedded in this question. Like blockchain technology was originally built to be trustless, and then it got famous for like not being trusted, and because a combination of like the use cases and the tools available to create trust and safety. And so we spent a lot of time thinking about this at Plural, which is like, how do we build a trusting relationship between us, our protocol, and the people who are investing and eventually going to be part of our community? And kind of what we landed on is this essentially a two-way street where we have to trust our users to make good investment decisions, and then they have to trust us and our issuers on the other side to not scam them. And so one of the things that's amazing about renewable energy is that within our product, we can embed a lot more trust than you could in theoretically like real estate or other real world assets. So as part of Plural, what we've built is we connect directly to the onboard IoT devices of all the solar fields, wind farms, and batteries that we work with. And every time that asset deploys energy to the grid, a token is created in our DPIN network that shows data around when it was produced, where it was produced, how much it was sold for. So immediately we're giving transparency to our users and trusting them to make good investment decisions and to spot any scams from our issuers themselves. Because if all of a sudden, the money you're getting from your dividend payment is way less this month, but those tokens are showing the same production levels, like you have questions to ask. And so I think it's all about, putting as much as you can into this like amazing technology that is meant to be trusted, and trying to like trust the people that are using it to do the same. I think that was like 20 trusts in that answer.
That was amazing. And also I really liked a very practical example of the transparency piece.
Yeah.
Right.
Yeah, there's obviously a ton of types of trust between like builders and the people who use the protocols, between like, and then we have to like build trust with the regulators and do all that stuff too. But I think the most relevant is for the end consumers. Like, how can they know that what they're buying is real and that they're actually going to get paid when it produces energy? Because like that's the whole vision here is for what we do is about trust in the assets themselves.
Yeah, absolutely.
Yeah, agreed. So Enclave Markets, as I mentioned, that it was launched last year, kind of in response to everything we've seen kind of blow up in the last year or two in crypto, with more centralized entities with transparency and trust, or non-transparent, I should say, in the centralized entities. So the idea with Enclave is that it's a fully encrypted exchange. So all the trades are encrypted in a secure enclave, as the name implies. So even the centralized operators, us of the exchange, don't have insight into the trading activity. So this kind of answers the problem of front running, market manipulation. So in my opinion, I think, trust and privacy are the huge things in building a safe future for crypto. And I think Enclave Market, I know I'm here to shill Enclave, but this is what we're building. And I think we need to kind of move on from these trustless centralized entities. As we've seen, that doesn't always work. So, building a fully encrypted exchange, or a FEX, as we like to call it, that's a new term. Yeah. I think is the future of crypto.
I will actually take the UX answer that Adam wouldn't give, and I'll give it. I think for crypto to kind of reach this scale of adoption that I think everybody believes can happen, but just hasn't necessarily materialized yet. I do think generally we need to, those of us building products need to make those as easy to use as possible. But one big component that is just it wrestles with the ethos of crypto day in, day out is transitioning the security risks from away from the end user. And so there are certain instances where that's that shouldn't be the case, or it's just not as appropriate. But by and large, kind of 80-20 rule, I think that's generally where we need to get to. A couple examples, obviously I'll shill our company and kind of how we do it in a second. But if you're a CFO, a FinOps lead, a founder, your banking experience, like we want your banking experience to feel like what you get with a traditional large bank institution. Hopefully it's better. Hopefully you're getting a better kind of personal relationship, but we want that experience when you're interacting with it to be the same. If you have built a business, like kind of a traditional Web2 business before, I'm pretty sure most of you don't go to sleep at night worried about like the security of your assets and what's happening with them. When you send a wire or an ACH, you're probably not worried about that. In crypto, I'm pretty sure we've all spent hours and hours and hours looking at Etherscan or Polygon Scan or some blockchain explorer, waiting for our transaction to go through and making sure that we didn't do kind of the wrong thing or fat finger something. And that's where we come in to try to make that process, that experience as seamless as possible. The other example I'll give, which has no relation to us, is if you're building a product, like kind of a consumer facing product, so think of like a game, your end user, the kind of the 19-year-old who's playing the game at home, it shouldn't be a security test for them to go play your game. Like they shouldn't risk losing their assets or maybe whatever they've earned in the game, just because they're not as technically savvy or as crypto savvy as they probably need to be today to do those things. And so that's what I mean when I talk about kind of transitioning the security risks away from the end user. It's obviously what part of what we're trying to do, and I think what a lot of folks around the space are realizing that they need to do to get to those millions, tens of millions, hundreds of millions of users for the products.
Yeah, I loved all of those three very different answers. And I'm just going to go completely off script. So sorry, guys, not on the sheets in front of us.
I'm ready for it.
But I heard a lot about trust, about transparency, about consumer protections. But a lot of the language was very crypto native. So I'm curious, how do you communicate this, or how are you thinking about, maybe it's not something that you're doing, and if you hate this question, we can skip it. But like, how do you communicate this more broadly when you think about more of the BD, more of the marketing, more of that like end user communication to make it more approachable?
You don't think that the average user knows what a DPIN network is?
I do not.
No, it's honestly like, as a founder, as a team, like it's a huge problem for us. Like we live too much in this space. And then our second space is the renewable energy industry, which is like also very technical and complex. Then our third space is US regulatory compliance, which is also really like mind-numbingly complex. Yeah, so we nailed it with being boring. But I think that, what like it all comes down to is just distilling the opportunities that the technology can enable and trying to just prove that, this stuff isn't what you hear about on MSNBC or whatever, that like, this is the worst thing that's ever happened to the economy or whatever is being said about crypto. And just proving that, like, look what you can do now. Like you can go invest in these like really, really good investments that are high impact, and that, there was a walled garden around before the blockchain like broke down that wall.
And I'm just specifically for you, I definitely want to hear from you guys, but just a quick follow-up. Like you're probably the newest, smallest company on the panel.
That's true.
Like how
just by a little bit.
Just by a teeny bit.
Yeah.
But probably a lot of people in the room are in similar situations.
Yeah.
Like how soon are you thinking about making that type of hire, or like where does that fall on your roadmap?
Yeah, I mean, it's also like, I know probably there are other founders out here. It's not like the best time to be raising money. So you have to, when you get it, you have to like use it in the right ways. And so we haven't decided yet if this is going to be one of the ways that we as a founding team just get better and smarter, or if it's something that we invest in. But it's, I think one of like, we, when you're trying to build these things, like you de-risk as many of the things as you can. And so like one of the things that we've done to de-risk it is say, like, for our pilot program, which is $100 million of renewable energy assets on chain, that's like the target for the next 12 to 18 months. There's enough on-chain capital and institutional capital to prove the model.
Yeah.
And so like the focus for us now is like, let's go to those groups that we can be like boring sounding to,
Yeah, no, 100%.
and prove it. But we also know that like the much bigger opportunity that makes us like the size company that we like hope to be when I'm not the smallest on the panel, is by expanding to the people who aren't here yet. And I mean, I personally believe that like, trust is the way you onboard, and then use cases and financial opportunities. Like, I have not found an asset that, like, other than like a high growth public stock that happens to pop, that has as stable and predictable high yields as the ones that we're going to be offering, on chain or off chain, that's available to the average person. And so I think the fact that like, because we use blockchain makes that possible, is going to hopefully be enough to drive people in, and we're going to always be working on how to message it.
Cool. Thank you. Sorry, I didn't mean to put you.
No,
in the
I'm ready.
I didn't mean to put you in the hot seat there.
Let's go off script. Yeah.
Yeah, I like this question. So from my perspective, I think there's two sides of the coin. There's transparency and then there's privacy. And in my job in compliance, I'm communicating with regulators a lot and a lot of lawyers, and they tend to come into it with a very negative mindset about crypto. And my response is always, first of all, crypto is extremely transparent. Everything is on the blockchain. You can literally see, and it's immutable. So that, this transaction happened on this day, and I'll, plug Chainalysis. This is what I explain to regulators is the blockchain is extremely transparent. So you can have a lot of trust just in that. You can see it, it's public. And then the other side of the coin is privacy. And again, so with Enclave, we're encrypting all of the data. So we're kind of getting rid of these single points of failure that we saw with, I won't name names, but some big exchanges that imploded last year where, only one or two people hold the keys to the castle. So instead, we have a decentralized network of attesters who are able to verify custody of funds. And then we also encrypt data so that there's not the higher risk of data leakage and things like that. So I think, transparency and privacy can coexist.
I'm going to use that. That's good.
Stealing answers.
Yeah.
That's fine.
I mean, I think that these two have put it pretty well. I think one of the other things that we've noticed from where we sit, and it's probably not surprising to most of the folks in here, a lot of the folks that have come into crypto over the last 12 to 18 to 24 months, or at least those who have stuck around after the last 12 or 18 months, have come from more traditional backgrounds. And so there is this kind of merging of their understanding of crypto, which is relatively nascent. And you may have a team or a product that's building for much more kind of crypto native users or teams. And so one of the things that it's always good to, I think you mentioned kind of being in this bubble of kind of crypto native the ecosystem. It's always important to remember that to get to that adoption and to get those folks that are new to the space to understand the crypto piece, make it kind of understandable in ways that they know. Again, we generally support and work with founders, CFOs, FinOps leads, those types of folks. Some of them, like Adam, are extremely kind of aware of the crypto native kind of infrastructure piece of what they're doing and what they need. But we also talk to folks who are like, yeah, I just joined a crypto startup 6 months ago. I've spent 20 years as a CFO for kind of traditional enterprise SaaS businesses, and I have little to no idea about how to manage a revenue stream that includes 7, 10, 15 different tokens, because we're getting paid in the native tokens of projects we work with. And so understanding that there's a gap there for now with those folks, and keeping them kind of engaged and understanding of how they can use crypto not because it's crypto, but just as a way to kind of make their lives easier, is one of the things that we end up focusing on oftentimes with the folks that we talk to.
Yeah, thanks everyone. Again, it's like we almost planned that with very different perspectives there, but we didn't. Lauren, I want to look to you first on this, but definitely curious to hear from everyone. You mentioned talking to regulators. So obviously building safely means thinking about how you do that from a legal and regulatory lens. And that is a big consideration right now. So I'm just curious to hear, we'll start with you, but everyone's perspective on just sort of the current regulatory landscape, how you're thinking about that, how you're approaching that, to, and where you think we're going from here, just to make sure folks are building safely, not just today, but for the future.
Yeah, absolutely. So obviously the big decision last week, the Ripple case that came out, everyone was celebrating, which was definitely a huge win for the industry. It was kind of a loss for the SEC, but at the same time, I wouldn't get too excited because, I think it's true that the SEC will definitely appeal it. There's no precedent set quite yet. So as much as it was a big win last week, I still think there's a lot of an uphill battle to go. And that I think it highlighted also the conflict we have right now between the judiciary and the legislative branch in our federal government. So right now, the courts are basically making all these huge decisions for crypto, while Congress is kind of, as we know, Congress is just being indecisive. But at the end of the day, I think it'd be important for Congress to step up and make these decisions, put out definitive bills, rather than leaving it to circuit courts to set precedent for crypto. So that's where I think where we're at right now. But unfortunately, it is pretty unfriendly in the US. So what we're seeing right now is a lot of companies going offshore. Right now, the UK and Japan are leading on the regulatory front. They're actually putting out pretty clear guidelines on how crypto businesses can operate. And then we're also seeing a lot of companies still going to the Cayman Islands and friendlier jurisdictions. But all in all, it's a bad trend for all these companies to be leaving the U.S. because of the regulatory uncertainty. So where we go from here, so there's actually a lot of huge bills up in front of Congress right now. Just yesterday, there was actually, in my opinion, what I think is kind of a dangerous bill put forward for crypto. So it's called the Crypto Asset National Security Enhancement Act of 2023. Yeah, long name. But basically, the reason I think it's so dangerous is that it has a very high probability of being passed because it's being put under the guise of national security, and it's bipartisan. But basically, what it would do is impose BSA, AML, banking regulations on DeFi. So basically, what the bill is proposing is that all DeFi protocols would need to KYC customers. They'd need to report activity to the government. They'd need to follow sanctions laws. So that kind of goes against what DeFi is in the first place. So I think it's important to also keep an eye on these huge bills in front of Congress.
I think she's the right person to talk about this question. She's very, very prepared. But I'll take just kind of our perspective of the regulatory market, because building kind of at the intersection of crypto and banking, I don't know if anybody's heard, but it's been a pretty rough place to be the last six or 7 months, particularly from a regulatory perspective. And so, the way we've built our business, we're U.S. based, we're U.S. focused, we serve folks in the U.S. That's a decision that we have made from day one, and we've built ourselves as if we were a regulated bank entity in terms of how we approach compliance and regulatory affairs, because that's the future that we think we need to build for, and that's going to be there 5 to 10 years from now. But to get there, we're clearly not there yet. We think digital assets are going to be a mainstream part of the financial system some point in the future. If you had asked us, maybe 9 or 12 months ago, we would have said, 5 years, and maybe now we say 10 to 15, depending on what we get out of the regulatory bodies in the U.S. But I think the point about the UK and Japan is an important one, because we are so focused as a company on the US that you can oftentimes forget that obviously crypto is default global. And there is a ton of innovation happening outside of the US in jurisdictions that are a bit more friendly. And hopefully there can be, the kind of global regulatory landscape can start to kind of even out. And folks, doesn't really matter where you're building, whether it's, in San Francisco or in London or Tokyo or wherever it may be.
Well, I have a follow-up question.
Yes.
So one of the big topics that you see like the thread boys talking about is fiat on ramps and like that operation choke point or whatever is focused on reducing capital flowing into crypto. And I'm wondering, if that's something you guys are seeing and how you're solving it.
Yeah, it's a that's a good question. Certainly, I think looking back at certainly with the benefit of hindsight, look back at kind of December, January, February timeframe, it became clear to us as a firm that was interacting with entities on both the kind of fiat banking side and on the crypto side. It became clear there was something going on. Obviously, we, or at least I certainly was not tapped into what was happening in the White House or anything close to there, but certainly saw a restriction on what crypto companies could do, especially as it relates to kind of interacting with the traditional banking system. Our view has been over the last kind of 4 or 5 months that at least for the intermediate term, if you're building in crypto, you're probably going to have to build a business on 2 parallel tracks. You're probably going to have to build whatever you're doing in kind of with crypto assets on chain. And then you're going to have to figure out a solution on the kind of traditional fiat banking side. And there are probably going to be narrow bridges, stable coins, USDC, things like that. The approach that we've taken, again, for kind of a short intermediate term until some of these kind of regulatory issues play out, is facilitating on and off ramp solutions for our customers. And so one of the biggest requests we've gotten from day one, we launched at the end of December. Basically from day one, the biggest request we've received is, can I take my USDC or my crypto and convert it into USD? And can I do the opposite? Can I go from USD to crypto? And it became a massive pain point for all of the builders and founders that we were working with, both who were customers and ones who weren't customers yet, but that was what they needed to build their business. And so we are imminently launching a solution that will allow folks who are customers of Dinara to off-ramp from stables to USD, and then shortly thereafter on-ramp USD to stables.
I think
in a compliant way, which is I better say, or my CEO will get
I think it's
upset
like
with me.
such an underrated problem that people like don't realize is not solved well. And I mean, well, I'm sure you guys do. If anyone who's building companies, like the amount of times that I've had to take company money through my like personal Coinbase. Maybe I'm gonna go to jail.
No, this
But,
is not, I don't think this is being recorded.
through my personal Coinbase account to be able to then wire it to my like corporate bank account is just insane. And that's like still like the state of play is and maybe getting worse.
Yeah, none of this is accidental either. I think they've called it Operation Choke Point.
Yeah.
It's basically cut crypto out of the banking system.
Did we call it that though? I feel
I
like
don't-
it might have been.
I don't
us.
think
Yeah.
maybe they didn't call it that.
Yeah.
We've
No,
called
but
it, but it's
it's very real.
Yeah.
It's very real.
So I'm gonna answer the regulatory question.
Go.
Okay.
I actually
So-
love that you're doing my job. I can just sit here.
Well, so we're I think really like we file with the SEC.
Okay.
So our general like POV is that to treat every asset on chain the same would be like foolish, and that there's a lot of nuance. Some tokens will be loyalty points, some tokens will be securities, some tokens will be tickets, and like to say that there's one standard for all tokens is I think foolish. And so the way we see it is that some digital assets are securities, the ones that we issue are, and because of that there's like a clear path for us to go down. So there's trade-offs associated with that. Like we have to KYC our customers, we get to use chain analysis for AML, and do a lot of like the regulatory compliant piece. But there's already a clear path for that. And so we think that, a lot of the like primary coins, ETH, USDC, all these things like should not have to do what we have to do, but we're issuing shares of assets that are like off chain and like well financed that has to go through these processes. I think that there's kind of like three categories of regulatory paths right now, where there's obviously the best one, the one we're doing, which would be like it's a registered security on registered exchanges, and that's because it's like a subsector of digital assets that makes sense to do that. Then there's like the Coinbase and Binance situations where the SEC or the government's trying to argue that most of these things are securities and they're not registered, and you're not a registered exchange, and everyone's in trouble. And then there's like the craziest use case or the craziest situation, which is, I don't know if you guys saw that company called Prometheum testifying on the Hill a few months back that got one of these regulatory licenses, and they're trying to make the argument that all these things are securities and we're the only registered exchange, which is like the dumbest of the dumb arguments, because it's like unregistered securities on a registered exchange is like somehow the argument that they're making sense, that they're trying to make, which just doesn't seem to work. So we really think that some of these things are securities, and when they are, there's a path for them right now. And if we follow that path, that means that as the regulations change, things are only going to get easier for us and our customers.
Yeah, I think that makes a ton of sense. And while it's like a harder maybe hill to climb initially as a founder, following all these requirements, you at least have that roadmap, right?
Yeah, and if anyone wants to do it, I'll just tell you how to do it. It's fine.
So I like that Adam took charge here, and I have one or two more questions, but they're boring. So I actually want to just turn it over to you all to see like what question. We've covered a lot of ground in the past like 30, 40 minutes. So I'm just curious, like what else is top of mind for you all? What else can we dive into? Yeah. Yeah. I don't need one.
Just throw it.
You can pass it out.
I actually have two questions. So the first one is for Adam. What you said just right now about securities, does it mean that basically right now it's clear if you understand that you issue security, you just, go through KYC, as you said, the process is clear. But if you deal with tokens and you don't want them to be treated as security, that's where the gray area is, and that's where all the troubles come from.
Yeah, basically. I mean, whether or not, like, I have my personal opinions, which is like there's not much gray, like in my mind there isn't gray area, like Ethereum's not security, and I don't have no right to say that, but that's what I think. But for us, like there is for our tokens that there is a path and we follow it. I do acknowledge though that like broader in the space there's a lot of debate and confusion for sure.
No, but I think you hit to like the core of the problem, which is like for those founders that are building a space where like we don't think we're security, you're almost in this really difficult catch-22, right? Where it's like you do something and maybe it's the wrong thing, and then you're like on the radar. You do nothing and then that's the wrong thing. So it's a very confusing path. And honestly, like part of why we're having this conversation tonight is like to bring people together to talk about this and figure out like what are people doing? What are the approaches? I think there's like a few different schools of thought between like do everything and do nothing and hope for the best, and like hope is not a strategy. Yeah. So I think like that's why these conversations are very important to understand like what are other companies, newer companies, larger, like what are people doing and how are they approaching this? Because I think it's like a very it's a very difficult question right now for the folks like we don't believe we're security. Yeah, you're right. But that's not clear. So
I think it's like yeah, that's definitely that's like right. I definitely think it would be a really tough time to be a founder launching like a utility token or a governance token. Like you don't know, you don't necessarily know what's going to happen. But the good thing is, at least in my experience, I'm interested if you guys have the same, is that the investor community has like really reduced the pressure, I feel like, on founders to have some type of token plan. That's at least been my experience so far. So a lot of investors that I talk to for Plural are, saying things like, focus on product market fit, and then tokenomics can come later, which is a relief.
I'm curious if you guys have any thoughts on that one.
Just to piggyback on what you guys said, I think the hardest part about this is, and this is kind of the way that we talk about it, not that, we have no plans to have a token given our business model, but when we talk to founders, if you can just give us the box, then we can play in the box. But until we have the box, you don't know where kind of what you're doing, where it's going to land. And I think that's that's the challenge that you guys are articulating, and I think what everybody feels. And so the sooner that we can get the box, and it doesn't have to be a perfect box, but if we can just get a box, we can work from there to expand it, to kind of build it into what it needs to be. But that's we're kind of in the transition phase of going from no box to a box.
Yeah, I think you asked the $1 million question. And I think it'll be interesting to see, like, again, like my point, are the courts, are the legislatures going to decide like where the line is for what a security is? Like, how decentralized do you have to be, right? Like, do you have to be Bitcoin decentralized, but at the same time acknowledging that, to launch a different token, there's going to have to be a certain degree of involvement. So, I don't know what that line is. So
Can I ask one more question? So I read an article today in Investopedia. I like Investopedia to read about stuff I don't know about. And so they say it's an article regarding the Ripple case. And they say that, what defines security is investment of money in a common enterprise with a reasonable expectation of profits to be derived from the efforts of others. And is this word in efforts of others, what brings the gray area of not being sure whether Ripple was a security or not, and which is essentially why I guess they won. So it's an open question, to be honest. I'm just curious to hear whoever's comment about why it makes this a gray area, like the efforts of others, because of a decentralized structure, which is basically what you almost just said. But yeah.
Yeah, I'm glad you said this actually, because I think we're going to see a huge increase in scrutiny on marketing of these tokens. Like, the language on how you market your token or your asset is going to be picked apart. And I think that's because, if you're promising gains from your token, then you're essentially saying, by this definition, you're saying it's a security. So I think we'll see probably a lot more tiptoeing around how people market. You can't be promising gains. You can't, be doing things like that. And there is even actually a new regulation in the UK that explicitly outlines how crypto companies can market in the UK, and it specifically prohibits you from promising things like a gain. And then to the point of from the effort of others, I think the reason, I'll probably botch this a little bit, but the reason Ripple won this case last week is that they were saying, oh, people were buying XRP on exchanges, not expecting gains because of the efforts of Ripple, the company. They wanted to buy XRP, the token, but they weren't expecting, because of things Ripple was doing, much like as
Like
a
you
company.
buy equity because you expect that company
Exactly.
to outperform. Yeah.
Exactly.
No, that makes so like the term others might be more deeply defined.
Which, and this is like going way beyond my like understanding, but this goes back to your point, Lauren, about like who should really be deciding this, because it almost sounds like the case was maybe more down to like some nuanced fine point than like the fundamental what is this. Yeah, that's interesting. Cool, great questions. Anyone else? Do you want the mic or do you want to just shout?
I think I can shout. Question for Laura. I wonder how soon do you think that you guys will have regulatory clarity?
Oh my God, you know this, right?
That's the $2 million question. Yeah. Yeah, $1 billion. Yeah. Oh, man. I mean, I think this year is going to be huge, especially with all these bills on the floor. And it'll be make or break. And I think it's going to happen quickly in the next couple of years. Or it'll make things more confusing, unfortunately. Like, so if they pass this national security bill, it's just going to push people out of the U.S. But I think it's going to happen sooner than later, for sure.
I would completely agree with that. I don't. Yeah. No, is there a follow up?
Thank you.
Oh, thank you.
Just to follow up on something you said about the box.
Mhm.
Isn't that already defined? It's like it's called no crypto. The box already says that. Isn't that kind of like the U.S. stance to there?
Yeah, that's probably a fair way to kind of categorize it. I do one point on just the general regulatory conversation. I do think it's important to step back and remember that. And again, this is me being maybe overly diplomatic, but important to step back and remember that every new technology paradigm goes through a period of scrutiny, and there's kind of required education that regulators have to go through, the government has to go through, users have to go through. It's probably not happening as quickly as any of us would like. I think that's not really up for debate, but I think it's important to kind of remember. And we don't have to look very far to see this happening elsewhere. If you look at generative AI, the same thing is happening with them, in which it's this new technology paradigm. Everybody got really excited very, very quickly, myself included. But now you're seeing regulators and folks that sit in those types of seats point at it and look at it and start to pick at things that could go wrong, things that have gone wrong. And again, it doesn't dissuade kind of our view that crypto is going to be a part of the kind of mainstream financial system 5, 10, 15 years down the road. But it's a process that kind of a learning process, an education process that we're all going to have to go through. And whether it's crypto, generative AI, pick your new technology that comes 10 years down the road. And so that's my kind of diplomatic answer for something that's good to kind of remember as we talk through all this.
I know you mentioned like a new paradigm with new technologies and all that, but why do you think regulators see crypto as such a threat? Any thoughts on that? Or it feels like it's being seen as a threat. Correct me if I'm wrong. But
Yeah, so I think there's 2 or 3 ways to look at that and to view it. It depends on how cynical you want to be.
Go for it, Wally.
You're gonna have to catch me one-on-one in a room without cameras and mics to get my true opinion. No, there are a couple different ways you can view it. There's the perspective that the government sees the technology as an underlying threat to its how its economy runs and how society kind of functions. There's also a component to it where we've always I don't know, 60 years done things one way. This is new. Change is hard for people. But the other piece of it is we haven't necessarily made this easy on ourselves. If you've look at the last 12 to 18 months, but even go back the last 8 years, there are pretty kind of consistent events that happen that cause people to lose faith or lose trust in the actors that are using or building crypto. It's not the crypto technology that is the issue, in my opinion. But until we get out of the cycle where every 2 or 3 or 4 years, somebody ends up on the cover of the Wall Street Journal for something that isn't too great to end up on the cover of the Wall Street Journal for, it gives a figurehead and it gives something for regulators to point at to say the people that are using this technology are using it for bad reasons, and because of that, we need to crack down on the technology. And I think that's a dangerous thing to do, but that's you can understand. Again, if you take a couple steps back, you can understand why some folks would take that approach. And so I think that's it's probably a variety or a combination of those reasons and other things that I'm not mentioning. But I think it's kind of incumbent on all of us who are building in the space to push forward a best practices framework and work together with each other, and to the extent that we need to with regulators, to build the kind of frameworks that we want to see going forward.
just a quick follow-up to that. I guess how do you kind of, when you think of Web3, kind of strike that perfect balance of user and anonymity, but also enforcing accountability within the space so that you're preventing bad actors from any of those malicious attacks?
Yeah, it's a really good question. So one of my relatively strongly held beliefs is the transparency that crypto offers can be used for good. Like we don't necessarily need to run away from the transparency. There are certain instances, front running would be one, where you don't necessarily want that transparency in the market. But because everything is, and this gets back to your point where you're educating folks about, you can track the assets on the public blockchain 24/7, independent of any service that you're using, because you can just go pull up, Etherscan, Polygon Scan, whatever. And I think leaning into that when it's appropriate is one of the ways that and depending on the business model and depending on your use case, is one of the ways you can do that. again, not to kind of bring this to us, but we have built for that from day one, in the sense that if you hold your assets with Denara, we want to make the kind of private key, we want to abstract away the private key management from you, but we don't want to take we don't want to take control of your assets. Your assets are your assets, and we want you to trust us as human beings. We want to build long-term personal relationships, and you shouldn't have to in crypto. We have this technology that allows us to provide you a way to publicly audit anything that you hold with a counterparty. And so what we allow our customers to do is, if you want to kind of double check our UI or whatever we're telling you is actually happening in your account, or transactions that have occurred or assets that you have, just pull up the relevant block explorer, go 24/7 independent of us, go check it, and call us on it. And I think that's a use case that we have found for bringing transparency to build the trust. Whereas I think a lot of folks, when they get in trouble, take the transparency and either obfuscate it away, or kind of gamify it in a way that isn't kind of in the best interest of users.
Yeah.
Yeah, no, it's I don't know, it's a good question, point, thought, and it's it's something that like I'm trying to figure out which nuance to live in here, but I think I think that there's a lot of value in the technology that is like much deeper than like the permissionlessness. I mean, I love the permissionlessness. Like, I would hate to kill DeFi. Like, that would be terrible. But I think that just like the idea that there is a like global system that we can all use and trust that's not within a platform, like, completely changes the way you build tech products. And so, like, on the custodian piece, like, one of my favorite products in crypto is now one of our partners. It's called Capsule. They're awesome, and like, basically what they're doing is they're doing the wallet as a service like experience, where it's like like social sign in, etc. But it's not tied to any one app. Like, so many of like the current like custodial wallet services are essentially like, oh, if I were to choose to embed Coinbase Wallet into Plural's UI, which we still might, like, it would be very, like, right now it wouldn't necessarily be easy for that user to log in with that same wallet in another protocol's UI and access their assets there. And so, like, how am I in the future supposed to take advantage of some of these amazing primitives of the fact that like my assets are not trapped in my protocol or my platform and can be used in a lending protocol as collateral? And like, you need to have, like, that's parts of the technology that gets like, it's so valuable. Like, it's so valuable to be able to do that. So like, you can't do that in Web 2. And so I definitely have a much more. This is like a little bit off from your point, but like I definitely have like this like maybe like naive or like optimistic view of like it's not so bad that like it's that this is like I don't necessarily agree with the idea that the US wants no crypto. Like I think that there are like very useful, I've seen some of my colleagues projects get SEC filings complete in the past like month for a tokenized security. And so I don't know. I'm optimistic about this stuff, but I haven't, been at Prime Trust and seen some of the things that's gone down. And I just think that like a lot of the next generation is about like thinking through a lot of like the new use case about like thinking through the primitives of the technology that make it, portable, composable, and all those like really exciting things that are underutilized.
Yeah, and I hate to be a broken record here, but I think unfortunately, until we get regulatory clarity, all the banks like they're cutting everyone off just because they're scared. Like their compliance teams are like, we don't want to touch that. We don't want to get in trouble. Even though we saw like Silvergate, for example, was a great example of a bank that onboarded crypto companies, and but yeah, I think until that day, the banks are gonna act very cagey.
Mhm. Yeah. Yeah.
And a lot of like the big players and dollars have taken a step back, right? So I think that's your point,
Yeah.
which it is like survival. I think it is like survival mode right now.
So
right?
we actually will have a really interesting experiment within Plural. So we have one of our assets is launching in Europe, and so like a key part of our like product is fiat moving on chain and then being distributed to token holders using our protocol, and then also like the reverse of these renewable energy companies are like raising money and they need to access that capital to build a new wind project. And so what I'm interested in is like we are going to have that flow, one in using euros where it's like euros to on-chain, euro coin to distributed, and then the other one, and then we'll have a few that are the US based too. So it's going to be, I think, like probably in 6 months I'm going to have like this like experiment that will really sharpen my hypothesis on like what the real problem is within it. Mhm. Okay. Yeah. There's the gosh, I can't remember the name of the company, but the chief product officer from Brex started a crypto company it's like Change or something like, and like their whole idea is like move between any on-chain or off-chain currency instantly. Like that's their like product problem. And so yeah, it seems like a good team building a good product.
Cool. Yeah.
I think this is more your your corner.
It's funny you asked this because I was actually just in Sacramento a couple of months ago with a pro crypto lobbying group who lobbies state legislatures basically, and we talked to a lot of representatives teams basically, and yeah, I mean I think they're very open minded, but there's a lot of hesitation, and the number one thing is always like scams and the general kind of negative connotations around crypto. And that was always the key themes of these conversations we had with the representatives in Sacramento, was that, oh, well, I was contacted by a constituent who was scammed out of $100,000 in this crypto scam. So, and he's telling me to vote against any pro crypto legislation, or bills. So I think that was the big theme I heard in Sacramento, at least. And personally, I'm a big advocate that I think California should lead the way in terms of setting regulation. I think California has the golden opportunity, no pun intended, to genuinely pave the way, though. Like, I think California should be stepping up to be the anti-bit license in New York, and be like very welcoming to crypto companies, and even be a model for the federal level.
I also think we should. Like, I think we should be talking, like, all of us should, like, not, literally all of us, but the people should be saying, like, talking to legislators. I think that does matter.
Yeah. If there's that guy who's complaining that he got scammed from crypto, we should be in the other ear saying, these are all the fantastic benefits, and the opportunities. So.
To me, it seems. I think most of the like anti-crypto is within the Democratic Party. It seems like, but it also, in general, seems that there's a lot of Democratic support for it. Like, it strikes me as something that like should not be a political issue, and also it strikes me as something that if it were a political issue, like the Democrats should be all over it. Like, rethinking the financial system to be more egalitarian just seems like a liberal principle. But that's at least my take. I don't know exactly what's going on out there.
I think you answered it great, and I agree with your the point that it's the most democratic kind of technological advancement that we've had, I don't know, this generation, and so that's like the word democratic is in what I just said for a reason, and so that's it's been a challenge. I think there's you potentially have there's a generational divide. Again, it gets back to this point where if you're taking the kind of glass half full approach of how people are approaching this, it's some of it is just change, and it's difference of opinion and kind of what they see.
Yeah, maybe a follow-on panel. I work on the private sector side at Chainalysis, but we have a huge public sector business, and we spend a ton of money and time and resources lobbying and doing exactly that to make sure that on both sides of the aisle there's a ton of education and the right bills are being brought forth. We are actually hosting a public sector, private sector crossover event in San Mateo in like 4 weeks. So I'll share that with you. I think that will be, I can't speak to it, but I know it's like a huge focus because it's a problem. So yeah, any other questions? I think the bar is still open for another like half an hour or so you can also grab us afterwards. But my goodness, thank you guys so much, and thank you everyone. This was wonderful.
Thanks, guys.
Thank you.
Thank you.